Okay, now guys, what are the things that you guys need to trade successfully? What are the components that you need to make sure that you have 100% command on it to trade successfully? What I will be considering when I am trading, and if I'm practicing, then that is what I will be focusing on, which is what I'm going to address with you guys. Okay, the first thing, raw market structure, guys. Okay, this is the first thing. Please confirm if you understand this. Please say yes. Everybody say yes. I will be discussing few things today, and I will be discussing these things in the next few days, guys. That's the first thing, raw market structure, which is what? Which is how does the market moves? The nature of the market, price action, the nature of the price action. How does the price move? The tracks, the horizontal, how the horizontal levels, the vertical levels, the relationship between them, the uptrend, the definition of an uptrend, the definition of downtrend. When does the trend changes? The structure changes. All these things make sense, guys. Please confirm if you understand this. Very basic. Okay, then what's next? So this is something that you need to understand even before you start marking your charts. Yes, the market structures lectures are on the website, the nearly 4 lectures. Okay guys, then what is next? The next thing, what do you guys think? What would be the next thing? Anyone? I understand the market structure. I understand how the market moves, right? I understand what's the definition of an uptrend. I understand what's the definition of a downtrend. When the trend changes, reversals, right? Yes, exactly. Mark your levels. Identification of the levels. Guys, you need to have 100% command on these topics, and then you will be combining them together to trade successfully. That's what it's important. Make sense, guys? Individually understanding, and then you will be implementing them together. That is what makes you a trader. Just focus on this. You should not have any problem trading successfully. Okay, identification of the levels, right? Okay, which will also include supply and demand levels. Okay, you guys understand this? Please confirm by saying yes. Everybody write yes. Maybe few of you guys won't be able to write yes because you're not participant here. Okay, great. Then guys, the third thing, anybody tell me what is the third thing? What do you guys think? What do you guys think? What's the third thing? Exactly. Amazing, guys. Well done. You don't need me anymore, honestly. Trap the price, meaning establish tracks, channels. You guys understand? And what I will say to you guys, do this on H4 time frame. But I will come to these individual topics in due course. But for now, once you mark your channels, once you identify the levels, then you go on to trap the price. That's fine, Tom. I will have the recording. Yes, brother. Okay. You guys understand, guys? The third thing is you need to trap the price. Everybody understand, right? Say right yes, guys. Please confirm. Okay, you trap the price. Good. Okay. What's the fourth thing? Anyone? What's the fourth thing? Anyone? Break and retest will be within the market structure, guys. The market shifts. Or break and retest will be within the trap of the price. Again, the fourth thing is, guys, you need to know the candlestick formations. when buyers and sellers entering into the market, right? Precisely candle by candle analysis. You need to know this. Combining these things together, you will be able to trade very successfully, guys. Yes. So please confirm, guys, if you're, I've been very specific here, guys. You understand? Okay. Okay. Then what is the last thing? Anyone? Risk and money management. That's it. Guys, these are the 5 topics that you need to master to trade successfully, guys. Okay. Okay. Let me add another thing. Candlesticks formation. And now this is optional, guys, but again, fibs. It's optional, but you can add into your trade. I would suggest learning them at least Fibonacci retracements, at least. Yes, I will suggest you guys learn this. Again, it's your discretion. You don't even have to use it. I've used few of my students above 50 grand as we speak. They're trading extremely successfully. They're not using Fibonacci's. Okay. Again, guys, I strongly suggest using Fibonacci's. Okay, and the 6th is risk management and money management. These are the six topics that you need to master. You need to master, you need to practice, you need to learn. You don't need harmonic patterns, honestly speaking. An add-on, you don't even need it. If you knew, it adds to the trading, it adds to your analysis. But if you don't know, right, you will not be at a disadvantage if you knew all these things. But if you knew harmonic patterns and you don't know all the rest of these 6 things, you would never be able to trade successfully, if it makes sense. This is compulsory, that is not. Again, Fibonacci is optional. Again, guys, if you're struggling, if you're still struggling, what I suggest is individually approach these topics, right? Individually approach these topics, right? First, understand them individually, and then combine them together for analyze and spend your chart times. Make sense? Antonio, do you understand? I've started a contract for 3 years in Middle East, and I am teaching them. I'm sure you guys have been thinking, how come recently I've started teaching market structure? I wasn't teaching the market structure like this before. Yes, it wasn't in my training before. I suddenly gave you guys a few webinars on market structure, and apparently it's been helping you guys a lot. Okay, give me a second, guys. Because the syllabus that I had made with one of the coordinators from the institution that I'm trading there, when we were making the syllabus, a very precise syllabus, and it's PDF, it's a lot of presentations that they have to make. We have decided to add the market structure when we were discussing the price action. And then I thought that I should share with you guys a market structure in this angle, and I'm sure it will help you, and it did. I have received messages from everybody saying that market structure has really added to their understanding and control over the markets. Makes sense? That was the reason. Otherwise, I wasn't teaching market structure in my training. I wasn't specifically teaching you guys the market structure. I didn't have special individual lectures on it. But the syllabus that we devised there in the Middle East, they came up with the view. I had a trader coordinator who had to work with me from their end to devise a syllabus. Then you had to print out the syllabus, things like this. It gives you a good control over the market. Of course, not 100%, guys. Remember, none of your trade will be 100% certain, but you can have a high probability trade. But that's what it gives you the edge over the markets. Makes sense? So that is one of the reasons I shared with you guys recently the market structure. I've been teaching them for nearly a month now, guys. It's been 6 weeks. And that is one of the reasons you see my presence, reduced presence. Okay, now let's focus on this. So please confirm, guys, if you understand these 6 topics, guys. Please confirm. Okay, I will be discussing raw market structure today. Few things, guys. I will be discussing few raw market structural points with you guys, and then we'll go on to analyze few pairs. That is what we're doing today. Okay, you guys understand? Okay, guys, in an uptrend, you know how the uptrend or bullish structure is. Give me a second. This is better. Okay. Okay, an uptrend. Guys, in an uptrend, the price makes a higher high and a higher low, guys. Yes? You knew this, guys. Everybody understand this. Basic, very basic. That's right, yeah. It's very simple, guys. Extremely simple. So this is the first thing. And remember, the bullish, this is a bullish structure. Example of a bullish structure, guys. And in a bearish market structure, John, tell me what is the example? How would you define this? It makes a lower high, guys, and a lower low. Every low will be lower than the previous one. I'll be quick on this because I want to discuss few points to keep in mind, guys, and then we'll practically see on the charts. I'll give you an exercise to complete today. So this is a definition of a bearish market structure. Exactly. So everybody understand this, right? Pretty simple, easy, right? Now, guys, very precisely, the bullish market structure remains intact or it remains valid. Very simple, as long as the price remains the price remains price fails to breach the previous low. Simple as. So if the price fails to breach the previous low, it remains valid. So this is the previous low, guys. Yes. So as long as, guys, the price remains to fail this level, an uptrend remains valid. Guys, remember, even if, remember this, guys, remember, this is what I want to discuss with you guys. Remember, So this is an uptrend. Price is here. Price starting doing this. And price has breached the previous high, guys. Can you see this? Guys, even if the price has breached the previous high, it doesn't mean the trend has, the structure has been breached. Make sense? Exactly. The price, even if this start happening on the chart, guys, the price has to break the previous low to confirm the break in the structure. This is only will be considered as a retracement. That's it. So you guys understand this? Everybody understand this? Please confirm, guys, if you understand this, all of you. Now, guys, okay, good. I'm coming to a very important point, few important points to keep in mind before we hit on the charts. Yes, okay. And in a downtrend, the structure remains valid as long as the price fails to break the previous high. Pretty simple, guys. The previous lower high, guy, as long as the price doesn't breach this, the trend remains valid. That's right. The price has to break the previous high, guys, to break the structure. That's simple as. Yes. Okay. And this. And if this happens, guys, price is not making a higher low, guys. And if the price start behaving in this fashion, let's focus on this. My question is, what happened? Which trend is this? This is a range market now. But what is the trend? Accumulation stroke? What? Tell me, guys, if the trend, the previous uptrend, yes, the previous uptrend is still valid. It's accumulation. It's an uptrend in an accumulation form, and still an uptrend, meaning it is a positive accumulation, guys. It can still go to the upside. That's right, sir. That's right. So this will classify as an uptrend. Remember this, guys. Even the previous high is not significant. It's a low that's important. Previous high is a significant level. Support and resistance level could be a supply demand level, guys. But the trend remains valid unless the price has failed to break the previous low or the previous high in a downtrend. So please confirm, guys, if you understand this. Okay, good. Again, if this happens, what is the trend, guys? Anybody? You will see these pattern formations, by the way. What is the structure, guys? Anybody tell me about the structure? What is the structure? John, what is the structure? My question is, what is the structure right now, guys? Is it an up? Exactly. Guys, it's an uptrend. It's an uptrend. Remember, it is accumulation. My question is, it's an uptrend or the downtrend. The price is in an accumulation form in an uptrend. Remember, the price had failed to break the previous low, guys. Remember this. When the price begins to start making a lower high, then the price has start making a lower high here, guys. Every high is lower than the previous, right? It means the trend is losing momentum, losing the steam. It doesn't mean it has been breached. Try and understand. It's not a definition that the trend has been changed or the structure has been breached. The structure still remains valid, extremely important. But yes, it might give you an indication it is losing steam. Make sense? And it might be, it's likely that the price will eventually break the previous low and break the structure. Make sense? Guys, understand? Remember, the key remains the breach of the previous low, the first thing. And the second thing, guys, even if you start selling based on these lower highs, remember it's a trade against the trend. Simple as a trade against the trend, because nothing has been confirmed yet. Very important point, guys. What I'm talking, these are the little points. It creates confusion when you're trading. Makes sense? Okay. So everybody understand, right? Okay, let's move forward. This is an uptrend, right, guys? This is your structure levels. Price above this level maintains the structure, right? The price and let's assume this is an H4 time frame. What time frame is this? H4, yes? Okay. And the price returns to the downside, right? Guys, it's an H4 time frame. Let's assume the price returns, testing the previous low, the structure. Now, guys, remember, when you're analyzing a structure on each time frame, very important point what I'm saying to you guys, because I think this would bring more clarity and control. When you're analyzing a structure, you have to analyze a structure on that particular time frame. Every time frame will have its own structure. Make sense? So let's say I am basing my trade based on, I'm analyzing my trade based on the H4 structure. Then my entry is, if it's based on an H4 structure, my exit or means my analysis of either the structure holds or the structure has been breached, has to be based on the same time frame, guys. Make sense? Very important, guys. Do not maneuver within the time frames. I will explain you how to do multiple analysis, multiple time structural analysis, but try and understand this. Let's say I've taken a trade here, saying to myself, this is where the structure is, right? Guys, for this trade, remember the structure will remain, and I say it's a bullish trend, it's an uptrend, bullish structure. I'm taking a trade, that's it. Okay, let's say I took a trade. Now, guys, the explanation that I've written on my analysis on the piece of paper, saying it's a bullish structure, I will stay in the trade, or I will be buying as long as this bullish structure will remain intact, right? Remember, guys, stick to it on the time frame that you have made an analysis. Make sense? You guys understand what I'm saying to you guys? Because even if you are buying here and the price arrived here and it's a bullish structure, it could be that on a lower time frame, it's a bearish structure. So if you move on to the shorter time frames, when you made your analysis on a higher time frame, you will have a conflict in structure and will create confusion. Make sense? I'm coming to this practically, but I just want to explain to you guys. This is the explanation. Try to understand. Let's say it's an H4 time frame, the price came down, guys. So this move is testing a retracement move, testing the structure, right? So now what is it? H4. Bullish structure, right, guys? So we have a bullish structure on H4, right, guys? Yes? Good. So the trade will be with the trend is that I should be looking to buy the dips, right? Buy the dips now. Guys, now what's happening on an H4 here? Let me give you an example of this. H1 time frame, for instance, we might have bearish structure. When price is moving towards H4 previous low. You guys understand this, guys? When this trade move was happening, let's say when this move began and when the price was going to the downside, right, retracing, testing the previous structure, the previous low, H4 remains still valid, but and its structure remains bullish. It's a bullish structure because remember this is the low. But on an H1, we might and we will definitely have a bearish structure in which bearish structure. And it will be like this. Try and understand this. Without this bearish structure, this move to the downside is just not possible, guys. And it will, let's say if it stops here, let's say. And the price went up, let's say. So I'll tell you what is happening on a shorter time frames. H4 and H1 is a pretty good analysis. It's an easy time frames to trade, to begin trading with. Guys, exactly this is what's happening on the shorter time frames. The structure has changed and hence you'll see the price has reversed. Please confirm, guys, if you understand what I'm trying to explain to you guys. So you had a break of structure and the price reversed and the price starting to go to the upside. Guys, you guys understanding this, right? Please confirm. It's very important what I'm explaining. I gave this, I've been giving these webinars in Middle East. I've given nearly 7 webinars already just on structure, guys, for them to understand. They are all bankers that I'm teaching after I had a contract. But we have really emphasized on structure and it has been helping them. I will try to give you guys the PDF version, the PowerPoint version which they have created, but I'm sure I'll try because they have the copyrights on it. Okay, I'm just giving lectures. Okay, guys, this is why the price reverse. So let's say if you are trading this, let's say, guys, I'm trying to explain it to you guys. Try and understand. Remember, you've taken a trade on an H4 structure. So keep in mind, based on H4, we are in an uptrend, right? And any trade, any sell trade to the downside remains a counter trend trade. Make sense? Guys, you understand this? Now, what I'm going to say to you is extremely important. Let's say the price is going to the downside and you want to buy, you want to take a buy trade. I'm analyzing H4 and H1, multiple structural time frames, guys, to take a trade. I'm going to explain to you. And H4 and H1 is a classic example. Practice this few, do 15, 20 charts. You will see yourself at a different level. Your control over the market will be at a different level. Guys, the price is returning. Let's say the price is returning, right? Let's say you have your Fibonacci's. For instance, you have your Fibonacci's, which you normally do. Guys, where would you take a trade? Where would you take a trade? The question is how you would take a trade. How you would take a trade. I'll give you a very specific example here so you guys understand this. Guys, price hitting a fib level, right? Any fib level. Price returning, how you are going to use a Fibonacci, guys? I will address this later, but I'm giving you an example. From the previous low to the high, that's it. So in this case, from this low to this high, from this case, this low to this high, so this low to this high. So when the price arrives and hitting a Fibonacci level, significant ones are 38.2, guys, 61.8. I like to see this, or anything between 78 and 88.6. There, you should have a harmonic pattern here. That is where you take a trade. The first thing is it. Okay, this is where you start thinking. Okay, I'm going to go long now, right? You say, okay, the price establish a double top formation, reversing. You're not trading against the trend. You want to get on the buying trade, another dip to the upside, but that's what the objective is, right? That's what the objective is. How move on to H1. Now I am on an H1 time frame, right, guys? And this is what the price now. What are the things that I should be focusing on? Exactly, this is what you need to do. The first thing, analyzing, not triggering the trade yet. Analyzing first. I'm expecting the price to hit any Fibonacci's level. That's what my first expectation is. It doesn't mean I'll take a trade. You guys understand this? Yes? You want to see an engulfing pattern or a pin bar. Only two patterns, guys, focus on. Engulfing, bullish engulfing, bearish engulfing, or hammers. You want to see these two patterns on those Fibonacci levels, even if they are not on Fibonacci levels, it doesn't mean. Okay, guys, if you take a trade based on that, right, it's an aggressive entry. It is an aggressive entry. It's not a confirm entry, guys. Make sense? Because let's say you can have, let's say, guys, let's say you have a pin bar here, or let's say, guys, you have an engulfing candlestick here, right? And let's say this is 61.8 Fibonacci's levels. Make sense? Make sense, guys? So the price arrives, you've got a pin bar, you've got an engulfing candlestick, double bottom formation, Fibonacci's level as well. So if you want to take a trade from this level, guys, right, from this level, after this, it's an entry. Yes, it is an entry. Stop loss below that level. I'll discuss the stop loss in a second. But guys, it's not a confirmed trade yet. Why it's not a confirmed trade? Give me the reason. I had hammers, I had engulfing pattern, I had a candlestick formation, I had a double bottom formation, price rejecting at a Fibonacci level, right? But it's not a confirmed trade yet. Tell me the reason. Anyone? Exactly, the price which was in a bearish structure in on an H1, right? On an H1 hasn't breached the structure yet. Make sense? Aggressive entry. And guys, this is your confirm entry. Okay, guys, try and understand what I'm trying to say, guys. This is where the trade confirms because the structure has changed to bullish on H1, which is also in line with your structure on H4. Make sense, guys? Yes. So now your H4 and H1 structure, both of them are bullish. That's right, Derek. Absolutely right. Guys, the best trading is top. When you talk about top bottom analysis, let's say you talk about top bottom analysis a lot. People talk about this, right? The best trade is this. When your higher time frames meet your shorter time frames or your entry time frame, guys. In this instance, guys, if trend structure on H4 is the best trade. The structure, when the structure on H4 and H1 is the same, and that is the best trade because that is the trade in the direction of the higher time frames. If it makes sense, guys. Yes. So guys, this is where the trade confirms, by the way. This is where your trade confirms. So if you take a trade here, don't be surprised if the price goes up, test the previous high and continue to the downside. Make sense? You guys understand this? Yes, it's pretty easy, guys. You can really plan the trade. You can really plan this trade, guys. It's extremely easy. It's extremely easy in advance. You can plan the trade even before an execution, and also you can use pending orders by using the structure within your trading. Extremely easy, guys. So guys, do you understand H1 structure and an H4 structure? The relationship between an H1 structure and an H4 structure. You guys understand this? Yes? Everybody's clear, right? It's guys, I will send you the recording and I expect you to watch this recording for like 10 times and then apply at least on 50 charts. Trust me, you practice this on 50 chart and exercise, which I'm going to practice for as an example for you. You will practice this 50 times. No reason why you shouldn't be a successful trader. It gives you the confidence in adding the trend lines, the trap of the price, adding the candle by candle analysis. You will always be in control. The structure gives you the control as to the direction of the market. I can say to you, the price is in a bullish structure. It is going to the upside. Any trader would interpret the market saying it's a bullish uptrend. The price will likely to make a higher high. That is it. Any trader saying against it is wrong interpreting the market. Reason is he's not reading the chart. Remember, with the structure, every trader will analyze the chart and the direction of the market objectively, not subjectively. Make sense? Everyone will say it's an uptrend. Make sense? Please confirm, guys, if you understand this, all of you. Again, guys, reflect what I've said. Again, try understand the relationship between both time frames. Okay. Now, let's say the price is here now on H4. You don't know yet if the price has established a top and then you can take a reversal trade. Let's say I want to take a reversal trade to the downside, right? Maybe a bit of reversal trade back to the structure, right? So when I'm expecting okay, the price might take a dip sort of things. Now, guys, my question is, where would you take this trade? Anybody tell me, when would you trigger the trade? Where would you trigger the trade? You're on H4 time frame, the price went up, now expecting the price to retrace. The question is, exactly, Derek. Again, guys, trade with the trend, it's much easier. But let's say you want to take a trade. I totally agree, guys. I strongly suggest don't take a trade against the trend. Trust me, he's absolutely right what he's saying. Those people who've been trading against the trend, I'm sure been burnt in last 2 weeks. The market, they can never trade in the trendy market, and the market normally remains trendy. But guys, for an understanding purposes, I'm going to give you a classic example where when that trade will trigger. Go on to H1 and you see when H1 changes from bullish structure to a bearish structure. If it makes sense what I said. Makes sense, guys? When on H1 the price breached this, that is where your entry was. Break of structure from bullish to bearish on an H1 gives you a retracement move. Guys, understand this, guys. And where would you exit the trade the moment that structure changes on an H1 again? Here. Make sense, guys? Yes? Guys, if you're taking a counter trend trade, you'll exactly know where the precise entry is and you exactly know where to get out of the trade, if it makes sense. And remember, I know it's a counter trend trade because on an H4, I know that is where my structure lies. Guys, please confirm if you understand the relationship between an H1 structure and an H4 structure. Practice this. You need to practice again. Strongly suggestion is trade with the trend, trade with the trend, trade with the structure. Extremely easy to make money. Okay, let's move on. Everybody understand? I know it might be difficult at the first instance what I'm explaining. If you sit down, think about it, watch this video again, think about it, go and take a pen and paper, try to draw this on the pen and paper first and try and understand what I am saying to you. It will make sense. It will make sense. Make sense. Okay. Everybody understand, right? Okay. Okay, now the exercise I want you guys to do is this. I was giving a webinar actually earlier today, so I've already had marked. Okay, I'll do this exercise with you again. Guys, I want you guys to do this exercise, all of you. John, I'm just giving webinars. I've signed a contract, so I'm just giving webinars based on my contract there. That's it. Okay, guys, I'm gonna do the same exercise with you guys here. Just see this. Guys, focus on this. I want you to do this exercise on 15 charts, and exercises identify the structure on H4, then identify the structure within H4 and H1, and then write where the break of the structure is. It's a paper trading on the structure. I'm practically doing this exercise in front of you. I want you to practice this on this weekend. Send me at least 5 charts. Everyone, make sense? Everybody, guys, you do this 5-10 times. Trust me, you will not need another trader telling you where the market is heading. You know exactly what the trend is, where the market is heading. Make sense? Okay. Let's start. I'm just marking the structure, guys. The moves. Everybody understand this, right? Guys, remember, it's a major point of reaction levels. Remember this. This is H4. Everybody understand this, right? So first of all, you'll mark where the break of the structure has taken place on an H4 time frame, guys. Yes? Where is it? Makes sense, guys. You understand this? Yes? Everybody understand this, right? Okay. Guys, then what is the structure right now on an H4 time frame? What is it? The previous low. What is the structure? That's right, guys. This is the structure. You need a break of this. This is why, guys, before the market closed on Friday, you had a buying trade on UJ. Very clean buying trade. I'll tell you guys in a second. But remember this. This structure was based on this, guys, the previous low. Just see this. That was the previous low. Pretty easy. This was the previous low. So the price came back to test the previous low, right? And that is where it finds support. Simple. So you guys understand this is an H4 structure, guys. Everybody understand this, right? So I want you guys to practice, first of all, H4 structure on, let's say, 5-6 charts. I'll give you example of another. Sorry, I'll give you this. Guys, you already have a structure here. Can you see this? I'll do it again. So when you do this exercise, take a previous structure and then change of the structure. Try this. So I'm going to take a bearish and then the bullish so I can pick where the structural change took place, right, guys? The structure will be the low. That's right. Christian, it has to establish a low. A low will be established by the wick or by the body. It could be anything. But remember, guys, when you're doing an structural identification, it has to be a significant point of reaction levels. Look, this is a structure, by the way. And then, guys, you also have this minor structure in between. Can you see this? But remember, guys, when you identifying the structure on H4, the easiest thing is identify the major point of reaction levels. That's it. But I will tell you, because minor reaction, that structural minor structure is the structure on an H1. So major structural levels, guys. Right now, what is the trend? And again, guys, you will mark your structural change. Where does the structure changes? So I want you to do this paper trading on this. So you'll be selling, and that is where you start buying. Okay, guys, most important, when the structure changes, how does it changes? Focus with me on this. The price is coming down. Okay, let me give you example in an uptrend. The price breaches the previous low, right, guys? Focus on me. Focus with me on this. The price breaches the previous low. Focus on this. The price breaches the previous low, and the price can go again back inside. It doesn't mean it's a bullish structure. The structure has been breached. Make sense? You guys understand this? The structure has been breached, by the way. You guys understand this? But remember, guys, you will not take an entry unless the price retest, and the retest is this, that the price returns. You guys understand this, right? Guys, you need a retest, break of structure. This is the break, the price went back. The price did make a lower high, so it has breached the structure. It has breached the structure. Don't be confused. Don't think it's a bullish structure anymore. It's not a bullish structure. Try, because the price has breached the previous low. It has. Now wait for the retest before you get on the trade. And retest could be this. The price might come back again. Get on the trade. This is where your trade is. You guys understand this? You will, most of the time when the structure breaches, you will have a head and shoulder formation. That's right, sir. Please confirm if you understand the point I've just made, guys. When the price breached the previous low, the structure was breached here. But breach doesn't mean it gives you an entry. It doesn't mean you wait for an entry. You wait for an entry on the retest, and retest is when the price returns outside the level it has breached. Break and retest, normal concepts. The structure has been breached. Why? Price has made a lower high, guys. That's it. Lower low, guys. It has breached the previous low. Okay, now take this example. Very important points that I'm trying to make, guys. These are little points, but it makes a lot clarity in your trading. The price breached the structure, right? The price breached the structure. Now what? The price went up. If the price returns back, you have an entry. You have an entry. It's a bearish structure. You have an entry. Make sense, guys? Yes? Okay. Now see this. Tell me, guys, what is the structure? When the price breached the structure, the structure has been breached, right? Structure has been breached, and this is your high, guys. When the price creates a high, that's it, guys. The structure has been breached. Now it's a bearish structure. Unless the price breaches this level, you remain in a bearish structure. If it makes sense, guys. Yes? So remember, the break of the previous low is extremely important. Extremely important. Keep an eye. Again, guys, what is the current structure? So I want you guys to identify like this. Identify like this. The price came back. The price returned to the upside. This is your structural low. And then the price went up. The price came back. This is your structural low, guys. You need a break of this to get on the trade. Simple as. Make sense? That's right, sir. You need a break of this to get on the trade, guys. This is where the price was Friday. I'll show you where the trade was, guys. Pretty easy trade. It was a buy trade, and I'm sure a lot of people have taken the buy trade. The price returns, test the previous structure, right? Bullish engulfing candles, hammers. Hammers, right, guys? That was your buy trade. Stop loss below the structure. Simple as. Use your trend lines. Make sense, guys? Get on the trade. Again, the price tested the structure, by the way. Another buying opportunity. So guys, again, I want you to do this exercise on H4 first. You guys understand the exercise that I've asked you on H4 first? Yes? Guys, do you understand the exercise that I've asked you on H4? Now, guys, I want you to do this. On the Sakina, you didn't understand. Okay. Sakina, I want you guys to identify the structure on H4 time frame, just like this. Pick something like this. Guys, it doesn't matter if you identify the minor structures, it doesn't matter. And again, then you will identify where the structure was breached, and I want you guys to write something where the structure is breached, if it makes sense. Yes? And then where the current structure is, I want you to identify it and mark a level there. If it makes sense, you guys understand this, right? Guys, then on the same chart, okay, this will make your chart messy, but that is what exactly I want you to do. On the same chart, go on to H1. Now, guys, on an H1, you can see that you have a see this. You have a bullish structure. You have a bullish structure, and then you have a retracement, right? So I want you to identify also structure on an H1 with a different color. When you will be identifying, you will see yourself bullish, bearish, bullish, bearish, bullish, bearish structure. What's happening on an H4? It's price going up, then retracing, bearish structure on H1. Going up, retracing, bearish structure on H1, if it makes sense. Select a different color, light color, and I want you to identify the structure. Guys, you understand what I'm saying, right? Everybody understand what I'm saying, guys? So identify the structure on H4 and then identify the structure on H1. But guys, for the break, of the structure, right? First, when you identify on H4, identify where the structural break take place, write it down on the charts. Then do the same exercise within H4 on an H1 time frame. Make sense, guys? Yes? This is where the structure was breached on H1, guys. You can, if you were trading H1, you would have taken the trade here instead of here. Make sense? Can you see this, guys, right? So guys, if you trade within the structure on a shorter time frame, your entry will be far earlier than the trader trading on a higher time frames, guys. Make sense? And if the price was to continue in a bearish structure on an H4, it would have done this on H1. It would have changed its structure on H1. If it makes sense, guys, please confirm if it makes sense. This was the move on H1, H4, way to the upside. You will see a bullish structure continue on H1. Make sense? Yes, that's right. Marcelo, that's right. I will be discussing the entries on candlesticks formation in the few next lectures. But again, this is today the topic number 1, raw market structure. Practice this first. I'm not discussing you guys how to take an entry, precise entry. My objective is you guys understand by doing this exercise where the market is heading. You know precisely where the market is heading, if it makes sense. You will know precisely where the market is heading, and when you say, okay, I think that pair is going up, it's a bullish trend going up, as in that moment in time, you are saying the right thing, and you should be objective, and every other trader should have been saying the same thing, if it makes sense. Yes, guys, yeah, exactly, Derek, exactly. You will be adding everything, support and resistance, all these things, supply, demand, all the trend lines, trapping the price. Yes, but yes, exactly. But guys, right now, I want you guys to focus on the structure. Exactly. So please confirm, guys, if you understand this exercise. Everybody understand identification of structure on H4 first, then you identify the areas where the structure was breached. Then you go on to H1 within the same time frame and select another color and identify the smaller structure within H4. Make sense? It was like this also, I think. This is the break of structure. So you got two reasons: trend line break and retest, and also you've got a structural break. It confirms, it gives you immense confidence, guys. Super confidence. Makes sense? You will become, this is like the stage 4, stage 3, trapping the price. Exactly, guys. Really, you will be in extreme control. But remember, guys, your focus is, as long as the price is holding the bullish structure on H1, there is no reason the price is returning to the downside, if it makes sense. For the price to go to the downside, it has to be in the bearish structure. Simple as. Okay, everybody understand this, right? Yes, everybody understand the exercise. I expect everybody to send 5 charts, and I will ask Sohail to check your charts, guys, because I will be extremely busy. I'm giving lectures tomorrow again, but it's not a holiday in Qatar. It's a working day there. I'm giving lectures almost half day. So Sohail will be marking your charts. He knows exactly where the structure and things like this is. He's been trading. Okay, now, few pairs, euro, US dollar. First of all, I've shared my analysis with you guys earlier today, a few of them. Euro, US dollar, guys. What is the structure? Anybody tell me the structure, guys? It's an uptrend. On the daily time frame, this is the structure, guys. This, the price retraces and the price went up again. Make sense? So daily structure is this. This zone is significant level, and the price is at 1.272 Fibonacci retracement, I'm expecting maybe if you will see some retracement, yes, It could be to these levels, deeper retracement to these levels before continuation to the upside. Well, that's what I think. Why I am saying this, guys, remember, as long as the price remains above this level, the price remains in a bullish structure on the daily time frame. Do you guys understand what I said? Yes? Guys, based on structure, I'm trying to help you guys to see the charts the way I see the charts, and try understand and tell me if you understand exactly based on the structure that possible next direction of the market. Yes, I'm expecting a retracement. Why is it? Because the price has it overextended, right? It's a Fibonacci expansions level, and I'm expecting Fibonacci's targets are here, guys. My Fibonacci's targets are here, to be honest. But I'm expecting some retracement. Yes, I think. How would you trade this retracement? Let's see on H4 time frame if you want to trade this. On H4, if you want to trade this, guys, okay. On H4, I took a sell trade on Friday based on the break of structure, by the way, guys, and that was the break. Okay. You might see this. You might see this formation. So, guys, that was the break. It was nearly 60 pips trade, I think. If you zoom into H1, you will see this. Yeah, this was the break of structure. Sorry, it was an H1. Guys, this was the break. That was the previous low, right, guys? That was the trade. Break of structure. Everybody understand this? So, guys, the entry was here. My entry was here. And that is where I get out of the trade, guys, around this level. Based on this support level, guys. You guys understand? The entry was at 128.24. The price went all the way to 127, 60, 65 levels. Easy trade. Sabs also have taken the trade with me on this. I think she did, if you remember. I'm not. Is Sabs here? Okay. Yes. Remember the trade that you have taken on this. Yes. Yeah. EJ. So clean trade based on structure. That's it. Based on structure. Easy trade. Now, guys, again, what is the structure right now in H1? Anyone? Where would you exit the trade, guys? This is where you exit the trade. This is where the break of structure on H1 have taken place. If it makes sense, get out of the trade. Previous high, price came back, make a previous high, came down and retraces up. Exactly, sir. That's right. I want to see a break of structure to get on the trade again. But I'm giving you an example. Right now, I want you to just read the charts. That's it. It's pretty simple. That was my exit. That was my entry here. Simple as. Again, guys, see this. Price came up, the price came down. That was your level, previous structure. You see this? Price went up, the price came down. If you go to 15 minutes, you'd have a hammer here. Trade to the upside. Simple as. You guys understand this, right? It's pretty simple, guys. Price came down, break of structure, fails to break the previous high, went to the upside. This was the first time the price has breached nearly in a week or so. That was the sell trade I've taken. Okay. Okay, move on to the next. Everybody understand the analysis on EJ, guys? Yes, higher time frames analysis based on structure only, guys. Try to understand what I've taught you today. Can you also, so when you guys say, when I say it's a bullish trend, guys, it has to be the bullish trend based on structure. We can't be different within each other. Yes, it has to be. I'm seeing a bullish trend, bullish structure on H4. I might be saying I see a bearish structure on 5 minutes time frame. Make sense? Yes, I would not, guys. You can pick tops and bottoms, but then if you pick tops and bottoms, then it counter trend trades, guys. In the counter trend traders are very successful and make more pips in the range market. But trust me, when the market takes a trend, they lose their accounts. They don't have the ability to get out of the trade. Let's say there is a range. I'll show you the range. I'm going to show you the range. We had a decent range before. I'm going to show you the range. You see the boxes on my charts like this. Remember, this is where I pick the range and play this range. Guys, okay, I pick the range and I start playing this range. I start scalping within the range. But guys, remember when I'm selling this, if you was meant to be in this range and you've been selling this, you had so many sells here, successful sells, buy, sell, again, break of structure was here, right? It was not just a break of structure. You see this, you had a break of structure, break of the trend line. Makes sense? So adding on will give you immense confidence. Adding on will give you immense confidence. Okay, now see this. Guys, if you're selling here, remember you're selling in a bullish structure. So maybe you've been profitable, took a sell scalp. But again, guys, if you didn't close your sell scalp on the break of this bullish engulfing candlestick, a lot of people normally lose their accounts when the market takes a trend. Because when you're trading successfully counter trend trades here, it gives you so much confidence and boost that when the market takes a trend, your mind does not accept that it is going sharp to the upside. Makes sense? And you expect the market to reverse again. And it didn't even retraces after this. Can you see the retracements? Hardly retraces. So counter trend traders will be at a disadvantage than a trendy trader. So what I suggest is when you're scalping, scalp in the direction of the structure. Pretty simple, guys. You should have been selling here. I was selling here, but you should have been buying here. Based on this structure, you should be buying in this box, buying scalp with the structure, bearish scalp with the structure. Classic examples in front of you. You guys understand this? Yes? Guys, Derek has been making continuous, consistent profits for weeks and weeks in. If you ask him the reason why he has been making profits, he'll tell you it's based on the structure, one of the significant reasons. And this is one of the reasons, even before I suggest you anything, he tells you, look at this. Trust me, practice this. It will improve your trading and take it to another level. So when you see the boxes, that is where I pick the range and I'm just waiting for the range to break. So I know whether the structure has been breached. When I make a box, it's for me to visually, as a reminder, if I'm scalping against this structure and the box is breached, forget it. Get out of the trade. Makes sense? Guys, please confirm if you understand this. I'm trying to help you here. Okay, now, so everybody understand this. Let's move on to the next pair. Guys, very quickly. This is where the structure on the daily time frame is. Guys, I'm showing you the daily time frame, guys. Structure. This is where the previous low is. I'm expecting the price to do a retracement. The trend line is the key. I will talk about the structure when you have the trend line within the structure. I'll talk about this at a later stage, but this is where it's important, significantly important, guys. We'll see how it works. This is the retracement I'm expecting. Maybe the price move on to the next level. A deeper retracement could be to these levels, guys. Make sense? You guys understand this, right? Go to H4, and if you're trading daily, if you go to zoom into H1, H4 will give you the bearish structure on an H1. You know how to trade this, but this is what the analysis is. Guys, the price breaches this on the daily, you back in the bearish structure, by the way. Okay, Australian dollar. Guys, can you see this H4 time frame in front of you? I've done this for a student, guys. Okay, there's a harmonic patterns completion here, by the way. You will see a reversal. You will see a reversal, guys. The price can go to 77.50, but you will see the reversal, guys. Can you see the structural possibilities that I've made in front of you, guys? Everybody understand them, right? Everybody understand? Yes? I don't have to explain it to you guys. It's absolutely clear in front of you. Yes? Okay, good. Let's quickly see the daily. These are the harmonic levels targets that I've identified, but let's see how it plays out. But there's a harmonic completion here, guys. We should see some reversals. Again, guys, you see this. Price went up, came back, tested, went up, came back, tested. Bullish structure. This low is higher than the previous, went up. If you've been trading against the trend, you wouldn't be able to trade, guys. You wouldn't even survive the markets. You wouldn't have survived the markets. break of structure, break of the structure, get on the trade. So everybody understands Australian dollar, UCAD. Bearish structure, guys, since daily time frame, right? This is where the structure begins. This is the day you should have been start selling it. Everybody understand this, right? Everybody understand this, right? So what is the structure right now, guys? Anyone? So even if, and what do you guys think? Guys, just see this. Even if the price retraces to this level, we're going to the downside. You guys understand this, right? Everybody understand? Exactly, that's right. Guys, it's pretty likely we'll see more to the downside. And again, guys, remember, mark your support and resistance levels. They will really help you out. So even before the price went up here, this is one of the significant barriers the price has to break. Retracement will be limited to these levels. Honestly speaking, I don't expect a deeper retracement than this. Again, guys, here you bring in your Fibonacci's. Bring in your Fibonacci's. Let's see what the price rejects. I'm okay. Good confluence is at 61.8 point of reaction level as well. It will be very interesting, guys. And then this is your first target. This is your first target. That's right, sir. That's right. Break of structure will always give you head and shoulder formation. Can you see this head and shoulder? This is a head and shoulder formation here on an H4. The banks have it is pretty higher in the banks, and the leverage is, guys, pretty worse. One of the it's 1:200, which is pretty worse. Most of the bank will give you 1:100, and the minimum balance that you can open an account with the bank will be nearly £10,000. The low-key banks and the high street banks, the city banks, will at least ask you to put deposit of $25,000. Again, guys, if you don't have huge investments, don't go with the bank. They won't even let you trade. And if you have huge investments, I suggest you strongly to switch to the Swiss bank. The Swiss banks are the world's strongest banks. Okay, quickly, guys, I need to finish this. It's late night here. Okay, Australian AJ, guys, beautifully bullish structure. Can you see this, guys? Yes? Everybody see this, right? Okay, guys, the price can return to this support level. This is a support level. Maybe to this support level, and we see continuation. Everybody understand this, right, guys? Yes? It was an easy trade. It was a pretty easy trade, guys, and it was a buying trade, very easy trade last week. This was one of the significant levels, by the way. The price came back to this level, slightly deeper retracement. That's it. This is this was 23.6, I think. Yeah, 38.2, guys. Can you see the 38.2? Exactly, the price achieved the first target. I'm still expecting the price to hit the next target. Makes sense? Pretty easy, guys. 38.2 Fibonacci retracement on the daily. That's it. You've got a bullish day. Tweezers, you've got an engulfing candlestick. If you zoom into H1, H4, you had a break of the trend line. Pretty easy trade, guys. See this. Now see this, guys, when the structure changes on H4, just see this. This is where the trade was. On H4, this is where you pick the trade. Make sense, guys? On H4, when the structure changes to bullish, get on the trade here. Easy trader on these levels. Not just this, guys. Not just this. As he said, as Derek suggested, we're going to break at the trend line. Break and retest. Make sense, guys? You understand what I said? Then candlesticks formation, reference line. You shouldn't have any reason to get out of the trade, guys. Okay. Everybody understand this, right? Okay. Finally, GJ. Okay, GJ, guys. Any retracement is only a retracement. It's a harmonic formation completion here again. Any retracement is just a retracement. It's a bullish structure, by the way. That's right. That's absolutely right. On an H4, if you're intending to take a trade, guys, break of this level will give you a trade. Makes sense. It's a bullish structure. The price went up, the price returns, fails to break the structure, another buying opportunity. Last Friday, you had a buying opportunity here, guys, by the way. Makes sense. You had a sell scalp, and then you had this was this bearish structure break on each 15 minutes, 30 minutes. Here you had a break of structure again. This bullish engulfing was a break of structure on 15 minutes to the upside, buying opportunity for everyone. Makes sense. Again, guys, I'm not going to the shorter time frames to create confusion. I want you to stick to H4 and H1, practice that first. Then you can practice it in any time frame, guys. Again, you might see some deeper retracements. We might see some deeper retracement. We'll see how it plays out. And finally, guys, just see this break of structure on the daily. Where the break of structure has taken place on the daily? Anyone? This candle retest, guys, the break and the retest, get on the trade. Break of structure. How easy was it? Anyone? Makes sense. And again, guys, this break of structure was on daily. Can you see this? This is on the daily time frame, right? Let's see if you had traded on H4. You would have entered earlier. Just see this. Look, this is the bearish structure on H4. See this. Break has taken place here. On H4, I would have got on the trade on the break of the retest. Makes sense, guys? Break, retest. So I had been earlier in my trade, then a daily trader was trading here. Makes sense? So a daily trader would have entered here. I am entering here, and I will be keeping an eye on the structure around these levels to see if the price has to reject here and go to the downside, then the price would have started making this here. You had a break of bullish structure on H1, H4. Makes sense? It never happens. Let's stay in the trade. Makes sense, guys? You understand what I just said? So when the journey begins, I knew what the daily is. Daily is that what the structure is. So the price will be aiming for this move first. Then maybe this or this. For this, the price has to break from bullish to a bearish structure shift on H4. Easy peasy. It never happens. Stay in the trade. Guys, you understand what I just said? Again, practice on 15 charts, 2015 charts, candle by candle analysis, trap the price. You fail, bet me, you won't be before I leave, everybody should be a successful trader, guys. You've been successful. A lot of people have been successful. This should add on. I wasn't teaching this. It was suggested to me by the lady. She works I'm not going to name the institution, and she's been trader for 32 years. She's working as my coordinator. So if I give a lecture, she translates into an Arabic language and give it there. Make sense? So the lecture when I give, there's translation going on along the lecture in an Arabic language. She's been trader for 32. She just trade structure. She just trade structure and 2 candles formation, pin bars and engulfing candlesticks. That's it. She didn't even trade, guys. Sometimes she said she trade trend lines. She didn't even add the trend line, and she trade every time frame, guys. She trades 1 minute. You can trade this on a minute time frame. You can trade this on a 5 minutes time frame. I'm going to show you in the second. Okay, let's move on. So everybody understand where we are standing as far as the GBP is concerned, right? Guys, there is no trade here. There's no selling trade. If you want to sell this, right? Let's say you say, I want to sell this. Guys, you want to sell this, right? Make sure it breaches the structure on H4. That's it. Okay, everybody understand, right? Say yes. I can move forward, guys. Yes. I hope this will make it up for the next few days. Yes, I've got a webinar tomorrow with you guys at 3 o'clock. I've got a webinar at 3 o'clock. I will address the questions at 3 o'clock. We are commencing next week. Okay, not right now, guys. Stick to this, please. New Zealand dollar. Okay, guys, I'm going to show you something. I'm not suggesting you practice this, but I'm just going to show you this. What I'm saying, for some reason it's not working again. This is 5 minutes time frame, guys. See how the structure has been respected. Can you see this? Because the price is going up, it will be respected. No, it's just not happening for some reason. Oh yeah, that's fine. Thank you. Make sense, guys? Yes. And before this, you see this. This is where your sell trade was based on each 5 minutes. Make sense, guys? Yes. You guys understand this, right? So guys, the structure works on any time frame, by the way. This is 5 minutes I'm showing you right now. But you need to understand the relationship, guys, the time frame you analyze and the time frame you trade. So my advice is, if you're trading H4, entry on H1 structure within. So you know what's going on in H4. If you're trading 15 minutes scalping, right, H1. So identify the structure on H1, then trade within it on a 15 minutes time frame. So right now, the homework is that you do exercise on H4 structure, and then within an H1 structure, send me 5 charts each. I've asked Sohail already. He will be marking and sending you the feedback. Everybody understand the assignment, guys? Yes. Everybody understand what I've been speaking today, guys? Yes. Has it helped you in your understanding of the markets? I'm going to leave a post on the Facebook, guys, and I would like your feedback on this before I give you a few more lectures. Okay, thank you very much and good night. Thank you.